All right. Hey, everybody. Just give me one quick second. Gina just ended a meeting, so I'm just kind of getting some things set up here real quick, and then we'll go over everything that we're going to discuss today. All right. Just give me a few minutes. Oh, thank you very much.
Talking.
I know. Yeah. Okay. No, I'm just gonna figure out how to get. Oh, I think I have to switch it. Let's see. Okay. Now let's start with this one first. Do this one. Okay. Okay. Okay, everybody. Good morning. I hope everybody's having a great Thursday. Okay. All right, so I should have been made the host now, so I should be able to share my screen and everything and to get everything started. But like I said, good morning. This is Cliff Cox with Cross Country Mortgage. I'm so glad that you guys took the time today to stop in and on Zoom here to discuss down payment assistance programs. I mean, this is always, a great topic, that everybody likes to ask about and, to see, hey, what options are available that are out there for clients that are looking to purchase a home. Maybe it's their first time and they're not really sure of the type of funds and how much it's going to be and all those kinds of things. These first time home buyer down payment assistance programs just seem to be something that can really help and help make that, that dream of being a homeowner be a realization. So, sometimes it's really just about educating and going over the best details and options to see what clients may, possibly approve for and so forth. So, and I love it. I love helping people on this journey. I mean, buying a house is probably going to be the most, the biggest thing that someone's going to do in their life. And it's just that first time that they know they have ownership of a home. I mean, it's just a remarkable experience. And that's why we just love to help in any way that we can. All right, so let me start. Let me share my screen. First, I'm just going to kind of go over the basics with down payment assistance, like what it is and so forth. So we're going to start with, here we go. We're going to do this one first. Okay. All right, so everybody on Zoom, can you see my screen? Anybody just say yay or do a
Yes,
quick?
yes.
All right. Everybody can see? Everybody good? Okay. Thank you. All right, guys. Let me make sure I do this. Okay. And then I'll be able to bring that back, I think. Yes. Okay. Okay, guys. So down payment assistance, this is what I wanted to do is I prepared a nice little PowerPoint presentation that kind of explains the different types of down payment assistance options that Cross Country Mortgage offers. I'm going to go over, like, once I get done, going through these details, I'm going to go over, just a couple, because I know for time purposes, I don't want to take up too much of everybody's time, but I'll go over our OFA program and our CCM Smart Start program, like once we get to that point too. Those are the ones that are a little more frequently used. So I'll really kind of focus on those two, and just so you guys have a good understanding of those particular products. Okay. Yeah, so here's my little table of contents. This is great. We're going to kind of discuss the conventional FHA and some other down payment assistance options here today. Okay. All right. So yeah, we'll just start with the basics. Terminology. Down payment assistance, DPA. So it's a type of financial support that helps homeowners cover all or portion of the down payment required when purchasing a property. Okay. And another aspect of it is this the Housing Finance Agency, the HFA. They're another company and like an entity that helps with clients in regards to the guidelines and certain things to the requirements for purchasing a property and what those down payment assistance qualifications are. So our chartered authorities established to help meet the affordable housing needs of the residents of their states. Just a quick note on this, every state is different. Like Ohio has, certain requirements for heir to moderate income, some demographic, locations and things like that. But every state has their own, kind of makeup on how they want to handle it and how they do their down payment assistance. But Ohio is obviously what we're focusing on is everything that you're going to see here today. Okay. And then community affordable seconds. This is a different type of down payment assistance program that actually kind of works as like a second mortgage that you actually pay on. So there's funds for down payment assistance that are provided and approved by federal, state, or local housing agencies. And it does not require the first lien of the mortgage to be sold to the housing agency in order to be eligible for the program. Okay. Home buyer education. I'd like to kind of touch base on this too, because I would say the majority of the down payment assistance programs that are available, they do have, most of them require, or most of them really recommend like a home buyer education. So, and once we get into OFA, I'll kind of go over theirs to kind of just, have a general idea of it, but it's all about information and understanding. So especially if you're first time home buyer, you never owned a home before, there's lots of things you got to just think about other than just, paying the mortgage. It starts talking about the property itself, the upkeep, preparing for, certain things that may happen if the power goes out or if, the air conditioner doesn't work, those kinds of things. It's a great, great resource that kind of gives people an idea of what becoming a homeowner is, what certain things to think about, what to expect, and to what to celebrate, so those types of things. And so we'll get into a little bit of that too. Okay. And then as you can see here where it says area median income, this is a really big focal point when it comes to down payment assistance programs because not everybody obviously can qualify for down payment assistance programs. I mean, it's really meant and designed for the people that need it. Okay, so that's why certain programs have income requirements. You can't make over X amount of dollars, to qualify for, because I think, and if you make over the area to median income limits, then you should be able to have your own money to, use for your down payment closing costs. So just great information, great points that, and the reasoning behind having these types of qualifications. It's like not everybody can qualify for it because not everybody needs it, which is probably a good thing. Okay. Some other terminology. Okay, DPA types is a grant. So I would say the majority of the down payment assistance options that are available are considered as what they call a grant. Okay, so it is a gift with no repayment, provided funds is required. So basically, after a certain amount of time, it's either that grant is completely forgivable or it's right off the rip, it's not, needed to be paid back at all. That's what a grant is. It's not a loan. Okay. And then another option is the forgivable soft second. Now, this is a down payment assistance program that will be given once it meets the provider's guidelines. So, say for instance, and I'll get into OFA 2 on that, is for forgivable second is like it has like a timeline. Like, say for instance, you purchased a property and you were given a grant of, say $4,000, and the requirements are you have to be in the house for 8 years. And then if you live in the house, you stay in the house, then that forgivable second is completely forgivable. You don't ever have to, pay it back if you would refinance or get out of that mortgage. Okay. So that's kind of like a little bit what that means. A deferred second mortgage. Okay. This is the assistance that does not require repayment until you move or sell, refinance, or pay off your first lien. So this is kind of like the opposite of the forgivable one. This one is actually you have to pay it back, but there's not really a timeline on it until you either move, sell, refinance, or pay off the first mortgage. So just some good information to kind of know when understanding what types of down payment assistance this is and what they could qualify for and what they can expect. And we go over all of those, those types of things. And then we have a repayable second mortgage, requires monthly repayment and a fixed interest rate. That is another type of down payment assistance. It's not something they have to come to the closing table with. This is set up as, okay, we're going to give you your closing costs or your down payment assistance money, but this requires a monthly payment and it's on a fixed rate that is secondary from the initial mortgage. Okay. All right. So let's scroll down. Okay, we're gonna talk about some the conventional options. All right. Our most popular that we like to showcase is our CCM Smart Start program. Now, this particular program, what we like about it is that they pair it with the Fannie Mae Home Ready product and the Freddie Mac Home Possible product. Now, does anybody have any idea what Home Ready or Home Possible is? Have you guys ever heard of those terms? Are you familiar with it? Do you know what they are, what they do? If you guys need to on Zoom, you can always unmute too. Okay. All right. So these particular programs, what they are is, oh wait, hold on a second. Let me send this back. Okay. All right. What the Home Ready program in, it's Fannie Mae's basically what they set their guidelines on, what their standard is for people to qualify that are first-time home buyers, that are only putting 3 to 5% down. There's an area to a moderate income qualification for all of those. I'm actually going to pull up a kind of an example for one of those just so you can kind of see it. And same thing with the Home Possible. That's just Freddie's version of Freddie Mac's version of the same thing. So what they did was they're like, okay, we want to try to help first-time home buyers, be able to purchase a property. We know they don't have a lot of money maybe up front in their particular situation, and they make a certain amount of income. Let's see what we can do to possibly help them. And what this is Cross Country Mortgage. What we did is we came up with our own program to help buyers be able to qualify for this particular program. I'm going to switch over to my other CCM flyer here too, because this kind of has a good breakdown of where we can be too. Let me pull up. Second. Okay. All right. No, we'll stay with this one. This one is pretty good. It can kind of cover it all. Okay. All right. So if you are a borrower that has just 3 to 5% down is well is what they're wanting to do. We will give them up to 2% of uh, down payment assistance funds if they qualify. Okay, so it's 2% up to $5,250. That's kind of like where the cap is for the program, where they, the max we can kind of do, but we will credit that towards their down payment or their closing costs. So we can apply towards either or, which is great. It'll just go towards the transaction. Okay. Like I mentioned, it's paired with Home Ready and Home Possible to purchase a single family residence only. This is what we're trying to focus on, at least a product for now. I think eventually they may maybe open this up to maybe like a duplex or multifamily, but right now the program is just designed for a single family, purchase. And the qualifying income is 80% of the area moderate income for that particular area. And so what I think I'm going to do, just so you guys can see an example, is, let's see here. All right, let's do, I think I have Home Ready. Here we go. All right. I just kind of want you guys to kind of see what I see and how we look to see if a borrower can possibly qualify for it. So what we do is that we go to Fannie Mae's website. We just go down and we just keep scrolling, and then I look to see, okay, let's try to find the area median income lookup tool, so we can try to see where, maybe where the borrower is looking at. We need to see maybe what the area moderate income is for this particular area, just to see if they can, if this borrower might qualify. All right. So what we normally do is we go in here and just, put in an address. So what I'm going to do is I'll just put in, for an example, I'm just going to put in, let's see here. Let's let this unfreezes here for me. It froze up real quick. I gotta let me just do a quick refresh of this. Okay. All right. So I'm just going to type in my address. So once it starts to populate here, Birch Park Avenue, Northeast Canton. Okay. All right. So this is a Canton address that I'm putting in, which is my house. And then once this searches, it'll kind of pull up. Okay. All right. So, and this is where you guys can check, even if this is something, I mean, I'll handle all this stuff for you, but just in case if you ever wanted to have any type of knowledge just for yourself, or if you're working with a family member, or just to have that extra kind of information, and you can even tell a borrower what they could qualify for, is be like, okay, we have a borrower that is looking to go purchase a house, on 123 Main Street in Canton, Ohio. Okay, so let's see where their income level, if they meet the requirements. So as you can see here, 80%, this is where you want to focus on for the product. So 80% of the area median income is 68,400. Okay, so if you've got a borrower that meets that criteria, they make under $68,400 for the year. That means they can qualify for not just the Home Ready program, but our CCM Smart Start program as well. Okay, which helps with their, that can be applied towards their down payment. So very, very cool information, very good information to kind of know and just to kind of be aware of. And what's great about this is every particular client that we have in our system, like every time I run a pre-approval, initially what we do is we just put in the zip code of where the borrowers may be wanting to purchase in, okay? And their income is already in the system, that I make sure I put in the correct income for them so it gets calculated properly. When I go to, once they get under contract then, and we have an actual address to put in, our system will automatically run and say, hey, based on the criteria on this application, this particular borrower could possibly qualify for the CCM Smart Start funds. I mean, we basically engineered this to make this as simple as possible, and we get immediate notifications that says, hey, they may qualify for these DPA funds, and here's the amount. So there's never an opportunity where that's going to be missed, where a client qualifies for it, but they don't get it. We're automatically going to know, which is great. And this is how CCM this is. And it's just a wonderful program. So I just wanted to kind of give you an idea of what to kind of do. I know in certain areas, let me see, I'm trying to think of some other markets that people may work in. Let's try Akron. Anybody got a Akron address or an Akron zip I can put in? Anything you know of? Okay, 44312 Akron. All right, so I'm gonna put that one in there. We'll see what pops up for this one. We'll see how close it may be sometimes. Okay. All right, here we go. So here in this particular area, like in Akron, I put in just the zip code, the 44312, and the 80% area median income in this particular area is now 76,640. So different areas, different counties, different areas, different cities, they all may have their own different one. And Fannie Mae and Freddie Mac, they set the standard in regards to what that area to median income is. So all those kinds of things, you never know. It just really depends on where the person is wanting to purchase the property. So this is just a great tool just to kind of have and be aware of. It's right on Fannie Mae's site. You can click on it and you can just go through as many scenarios and options as you want to see, hey, this is where we need to be. Okay. All right. So now let me go back to where I had it. Okay. Okay. Down now. Oops. Hold on. Okay. Sorry, I backed out of it. It kind of fast forwarded me, but okay. Now let me see if I can enlarge this again. There we go. Okay. Okay, so yeah, that in itself is the CCM Smart Start program. So, like I mentioned, you got to put 3 to 5% down to qualify for the program. If you got a borrower that has, hey, we have our own money, we're putting 20% down, can I still qualify for that? The answer, unfortunately, is no. This is really designed and engineered for first-time home buyers that are putting 3 to 5% down. If they put more than that down, they no longer qualify for the program. All right. And what's nice about this is that this is a true free grant. Like it never goes on as like a second mortgage or anything like that. It's truly funds that are gifted to them at closing, and then that's it. There's no repayment penalty. There's no if they sell their home within a year that they have to pay it back. None of that stuff. This is why it's so great, and it's exclusive to Cross Country Mortgage. This is a grant that never has to be paid back without any conditions or terms. So we just love that one. Okay. All right. So the next one here that Fannie Mae offers too is called the CCM Community Promise. Now, this particular program is a little bit different. You have to be in a certain market, statistical areas where they is what they call it. So they have to live in an eligible census tract. So in certain areas, let me see, eligible metropolitan statistical areas, like you'll have to see on here. I think let me see, like there's an area in Cleveland, that qualifies for this particular option. And then I know they're working on a couple other ones, but right now, just based upon where Fannie said, hey, these are the eligible cities, this is what we have to use to kind of qualify. So I know this one is a little bit out of, most of your guys' area. And, unless you do work up in Cleveland, they may possibly be able to qualify for this particular program. Okay. All right, so this is paired with the Home Ready program, like I mentioned, but this one's a little bit different. The Home Ready income limits do not apply. Okay, but the area to moderate income must be less than or equal to 140%. So, back when we did, let me do another, let me just pull this up just so you guys can see. where the difference is in that particular income. Hold on one second. Sorry, guys, this for some of their system is kind of slow today. Okay, so here you can see right down here where it shows in this particular area. This one, let's just do, we'll go back to Canton. Okay. All right, so where you see where it says 140,000, or I'm sorry, 140% area median income. All right, so for the Canton area, now we'll scroll back over to here. Like if this is just as an example, if the home ready limits, since it doesn't apply to the as far as the income limits, but they must. What the only part of it that it does apply to is the 140%. So the income would have to be less than that, less than or equal to 140%. So they couldn't make more than 119,700 for that particular area. Okay, that's just a quick example where I wanted to make sure and kind of show you guys where we're coming back to how do we find out what these income limits are. That's how you find them. Okay. And then this particular program too, one of the borrowers must be a first-time home buyer, and they do require the home buyer education. Um, if all home buyers are first-time home buyers, so they got to make sure. But what's nice about that is we'll send them a link to kind of be able to click on that, so they have the understanding of where do I fill this out. We help them get set up with all of that. All right, just real quick, is there any questions? Anybody on Zoom have any questions about the couple that we've, discussed so far? Anybody in the classroom, anybody that has questions, please feel free to just to unmute and just start talking. Okay, everybody's good? Okay, all right, we'll keep pressing on. All right. Last feature for this particular program too is the down payment assistance can go up to $6,000 with no grant repayment features as well. So this can pretty similar to the CCM Smart Start, but this one can go up to about 6,000. So another great program if you meet the criteria. Okay. All right. This one we have this is Freddie Mac's version of it. So the borrower smart standard. So very similar to the home promise, except this one, they open up all of the different areas. So we have like the geographical area that it's eligible in all 50 states. This is paired with Home Possible or Home One product, which are both Freddie Mac products. Follows first mortgage insurance requirements, those kinds of things. But this one, there's no first time home buyer requirement. So they do require the home buyer education, but you do not have to be a first time home buyer for this particular program. You can be a second buyer if you meet the criteria. Okay. And for the down payment assistance, the DPA amounts varies by the area moderate income. So we basically just check it like we just did with the Fannie Mae site. It's the same thing with Freddie. We look and see, we go to their site and say, hey, okay, if it's long as it's less than 80% area moderate income, subject to the property, must be located in high needs, rural census tract, all those kinds of things that they have to meet that particular criteria. And we'll make sure and check all of that stuff once we get the property address of the home that they want to buy in. Okay. All right, and this is pretty much identical to the other Fannie Mae product. This one's data is called the Borrower Smart Access. This is just Freddie Mac's version of it. It has to be located within one of the areas below. Like I don't think the Freddie Mac one has anything in Ohio at this time, but I know Fannie does. Okay. All right. So, and this is a new one. This is a new one that is just kind of starting to kind of come to get together. It's called the VLIP Down Payment Assistance Program. It's the very low income property, areas. So like if the area is even less than, I think it's 50%. So let me scroll back. Okay. All right. So this particular example, see where it says the 50% area median income, the very low income areas. This is another down payment assistance program that it can help them even qualify for it. And so, but this one is nice because I don't think this has any LTV restrictions since this is all income based, this particular one. So the down payment amount is it can be up to $2,500, must be used towards down payment, closing costs, or satisfy any kind of minimum whatever their minimum contribution is. So, and this is another one that's non-repayable grant that's offered to very low income borrowers. Okay. But what's like I mentioned about this one, which is kind of great, and what's unique about it is it doesn't matter the LTV that they're putting down. Okay. All right. A couple other down payment assistance programs that we can access through cross country mortgage. This one is called. There's one that they offer. It's through Lakeview. It's called the National. All states except um, Ohio is on this list currently, and so we're trying to get them to be an approved one. These are just ones that I wanted to kind of let you know about that are in our portfolio, but we're trying to, to get a couple of these to kind of, entered into our realm as well. But this one, unfortunately, as of right now, Ohio is not allowed to use this particular option, but it's a good one, and I'll go over once we get more approval for it because it allows for a little bit higher median income limits. All right, so now some FHA options. So, FHA, this is what we have. This is one that we can do in-house. It's through our CBC Mortgage Chenoa Fund. Okay. Now, this is available in all the states now except for New York. So Ohio is eligible. This one, the one that's already approved. The details for this particular program for the Chenoa Fund. It's a 30-year fixed term, FHA repayable, cross-country mortgage. This is the only Chenoa Fund, program that we participate with. The area median income limit is 135%. So basically what we do is, as long as they meet that requirement, as long as the area median income is under the 135%, they can possibly qualify for it. Okay. And the down payment assistance, it's either 3.5%, which is FHA's minimum amount, or up to 5%. And it's permitted to be used for the down payment, prepaids, or closing costs. Now, this one it's a second mortgage that goes on there like a second mortgage. So it's a fully amortized, repayable second mortgage. It's a 10-year term, and the interest rate matches the first mortgage note rate, which is kind of cool about that. So if we're getting them locked in to an FHA 30-year fixed, and we'll say the interest rate is, we'll say 6.5, that's going to be the rate for, this down payment assistance program. That's what it'll be based on that, but it'll be a 10-year term as opposed to a 30-year term. Okay, so just kinds of, just some other, options to kind of discuss and kind of think about for them. And that's a cool one for FHA. It's rare that they just have an FHA one other than just like OFA and some of the basic ones. Okay. All right. This Essex mortgage one. I know this one is a new one that's going to be getting rolled out that should be eligible in Ohio. I think all the states, yeah, are eligible except for New York. And let's see here. This is another FHA option form. It's got to be at a 30-year fixed mortgage, obviously for the FHA. It's FHA repayable. This one's kind of unique though. This one doesn't have an area median income limit requirement. So no first-time home buyer requirement. Home buyer education is required. But this is a kind of unique, pretty cool program too for FHA borrowers. So same options though, 3.5% or 5% down, permitted to be used for down payment, prepaids, and closing costs. They can't get any cash back. Like say, for instance, they were getting a good amount of seller concessions and they had some extra funds, left over with using this down payment assistance grant. They can't get any cash back. But it can just basically be applied towards their principal reduction. That's how they would get just credited. They just can't get cash back at closing or anything like that for this one. And it's a fully amortized 10-year repayable second mortgage, very similar to the Chenoa Fund, and the interest rate is 2% above the first mortgage rate note. So you see a couple of the differences. Like this one, this particular program doesn't have an area median income limit, and there's no first-time home buyer requirement. But the interest rate is going to be 2% above the mortgage rate of the first loan. So Each program is different. They're all kind of, they have their benefits, their pros and cons, but it's really what's best for the client to see what makes the most sense for them financially and what we can potentially get them qualified for. But it's just nice to kind of have some other options than just the basic ones. So very cool program. All right. And so the other DPA options, I'm going to pull those up because it's the ones that I kind of talked about. So I'm going to stop sharing this screen real quick, guys, and move over to my other one. Let me see if I've got this right. All right. Let's see. I think it's this one. Yes, this is the one that I want. Okay. We're going to do communities first. Oh, you know what? Here, I got a better idea. I'm going to go back to the one that I was because I want to go over OFA. All right, guys, hold on a sec. We're going to go back to the one that I was just on because I want to go over some of the OFA stuff now. Okay. All right, guys. So here's OFA. This is probably the down payment assistance program that you guys have heard of probably the most. It's the most common. It's the Ohio Housing Finance Agency, and they've always been a big player in regards to down payment assistance and helping borrowers get into homes. Okay, and Cross Country Mortgage is an approved OFA lender, which is great. So when I am working on a client and we want to check and see if they possibly qualify for, the OFA program, the first thing I do is I go to OFA's site and I start looking at all the criteria. All right. So first, I always pull up the rates just to kind of see what the mortgage rates are for them and what they could potentially qualify for. So I'm going to scroll down. We're going to go over first time home buyer. We're going to go over FHA and we're going to go over conventionals first. Well, or basically I should say government and then conventional. All right. So as you see on here, okay, OFA's rates as of today. Okay. So if a borrower is looking to get, or wants 5% of down payment assistance funds to be applied towards their transaction, and this is just a standard typical borrower that's not essential worker or anything like that, or hire worker, or I'm sorry, Ohio Heroes, all those kinds of things. The rate for them based on today's pricing would be 7.5%. That would be their rate. But they're also going to get 5% towards their down payment closing costs. So and this is for FHA. That I'm just going to use that as an example because I'd say FHA and USD are probably the biggest, the ones that we do the most of for this particular program. But for FHA, you guys know that 3.5% is the minimum required amount down for FHA on an FHA loan. So the difference then, that other 1.5% that they have after the 3.5 covers their down payment can be applied towards closing costs. Okay, so whatever their closing cost ends up being, they'll have that additional 1.5% that'll be applied towards their cash to close. So a very cool program. Now, what's nice about and unique about this one is if they are considered an Ohio hero. So if we've got, a veteran, where we've got, police officer, a teacher, a nurse, a doctor, anything like that, they will qualify for the Ohio Heroes program because they meet that criteria also, along with the other qualifications that are required for OFA to be approved for this particular DPA fund. So, and what's nice about this is now you can see if they are Ohio Hero, they get an extra quarter off their interest rate. So their rate, with getting 5% in OFA assistance would then be 7.25. Okay. And then say, for instance, if they didn't want to, if they didn't, they're like, Cliff, we have some money, we don't need the full 5%. Is there a way that we can just get a little bit and then we can kind of go from that? I mean, like, absolutely. They break it down in the tier. It's like a 3-tier system. So if they have in need of only 2.5% in OFA down payment assistance, okay, then on their FHA loan, the rate would be 6.75, and then they'll get 2.5% grant towards their closing costs and their cash to close. Okay. And as you can see for Ohio Heroes, the rate gets even better. It's to a 6.5. And one thing I want to make clear too is that if you have a lender that says that they're doing an OFA loan for that particular client and the interest rate does not match up to what OFA does, they're not qualified to do it then, because every interest rate we have to go off of what OFA sets. So they set this across the board So as long as you are an approved with through OFA to do the loan, these are the rates you have to go off. You can't give anybody a higher rate. You can't give any, anything like that. It's they set the bar for that. So I just wanted to make sure that that was, that was very clear. But so again, in this particular case, the Ohio Heroes would only be paying 6.5. And another thing is, which is really cool too, which they added is the grants for grad. So if you meet the criteria, you've got a college graduate that just recently graduated and they got their first job and they're wanting to get a home, they can qualify for the grants for grads program. I mean, that's really cool that they're really trying to focus on helping first-time home buyers, into their situation and to help with their cash to close. But another thing is, which is kind of unique, is for first-time home buyers, if they qualify and they meet all the criteria with OVA and they don't want any down payment assistance, they just like, let's just try to get a rate that may be a little bit below market. This is something that we can do for them because, as you can see, with no OFA assistance, with OFA today, as of a 30-year fixed rate on an FHA loan, is 6.125, and that is lower than what's the market is right now. You know what I mean? So great opportunity for them to take advantage of this. If they have their own funds available to use towards their down payment closing costs, they just want to try to get the lowest rate and then the lowest rate and the lowest payment, I should say, possible. We can get them qualified for OPA with a below market interest rate. Okay. So very good, program. I'm so glad that we are an approved OFA lender. This has really helped out a lot of people, qualify and to get the payment to where they need it to be, for their families. Same thing with conventional. As you can see here too, the rates on the convention are a little bit different. So if for a conventional 30-year fixed, first-time home buyer, if they want 5% OFA assistance, the rate would be 8%. If they only needed 2.5%, it would be 7.25. With no OFA assistance, the rate would be 6.625. Okay. Same thing with the Ohio Heroes. It's always, like at least a quarter better. Same with the 5% as opposed to all of these different options. The only thing, for the grants for grads, if this is really meant for them to be qualified with down payment assistance help. So they can't just qualify without the OFA assistance on this one. So, but if this is definitely help them with their funds down. Okay. Next, real quick, that I just want to kind of discuss and show real quick is the next home option. So a lot of clients that have either been first-time home buyers and they have their house sold and they've had home ownership within the last 4 years. Okay. OFA does offer what they call a next home program. So what this is that they will offer a rate if they want to get one with no OFA assistance, and the max they'll do for the next home is 2.5%. So it doesn't matter what it is, if it's their 10th property or whatever it is, if they're gonna make it their primary residence and live in it, the max assistance they can get is 2.5%. So, and that's with government loan and with conventional loans. So same here with the 2.5%. If it's a government loan, FHA, VA, USDA, the rate would be 7%. With no OFA assistance, it would be 6.5%. Okay. Same with this one here with conventional, 2.5%. The OFA assistance, it would be 7.375. No OFA assistance, 6.875. Okay. So this is exactly where we go to kind of try to see, okay, let's try to figure out, can this particular borrower, what the rates and things like that would be for them to qualify. All right. And then now what I want to look at is to see what the income limits are, because this is another hot topic. Be like, okay, well, what are the income limits to qualify for OFA loans? And you can go right onto their site and you just click on the price and income limits button. Okay, so this then takes us over to where we would look. And so you can go right here. It's very easy to kind of navigate and kind of go through. I always go here and you can click on the county. So they have all the counties in Ohio listed here. So we'll go to Stark County so we can see ours. We'll do like Stark and then I'll pull up Summit just so you guys can see. I can work my darn mouse right. Okay. All right. So Stark County, purchase price and income limits. Okay. All right, so for FHA loans, all right, so a 1 to 2 person household. So that means there's going to be 1 to 2 people living in the property. Okay. Their gross income combined cannot be more than $109,560. Okay. And this is for Starr County. And if it's a larger family, anything that's 3 or more people in the family, the combined income for everyone living in the home, well, I shouldn't say that. I should say the combined income for the 2 borrowers that are going to be on the loan. So if it's mom and dad, they can't make more combined than 127,820 to qualify for the OFA program. Okay. And this is any of the programs. So it's either they're using down payment assistance or they're just going to go for the interest rate option. They have to meet these income requirements in the purchase price limit. So non-target new area existing homes, no more than 510,939. Target new and existing homes, 624, 481. Okay. And what's nice about these guys is that the income limits have really increased over the years, because as you see, the cost of everything plus what's going on in the marketplace, you know, um, the cost of goods are going up, real estate is going up, but people are also making more money. So they have to try to they used to just be like $50,000, $60,000 was like the max you could make. So they finally upped that and it makes it more reasonable and affordable for people to qualify. Okay. And then now we have the conventional guidelines, and this is nice too, because conventional has changed. Conventional used to be almost lower than FHA, but now it's pretty equivalent. So as you can see, for conventional loan option for OFA, the 1 to 2 person family household is 109,560. Okay. And then 3 or more person family, 127,820. And this is all for Stark County. All right, so let me scroll back up real quick just so you guys can see just maybe 1 or 2 other options. All right, let's go back. I want to see, I think Summits is pretty similar to Starks, but let me just double check. Let's just see, it may be. We'll do like Wayne County next. We'll just try to some different ones. Okay, yeah, no, this is a little bit different. Okay, so here we go. So for Summit County, as you can see, the area moderate income limits are just different there too. So 1 to 2 person family, 114,960 is the income, the max that they can make. So it has to be that or less. 3 or more person family, 134,120. And this is the same for the conventional option as well, just so you guys can see. So all government, all conventional, they have to meet that criteria. Okay. And then we'll do one more. Let's do like Wayne County, because that's I know some of you guys work out in Wayne County too. All right, so let's see what theirs is. I was kind of wanting to look at that myself anyway today. All right, so Wayne County's. Let's see. Okay, so this is very similar to where Starr County's is. So Wayne County, same 109,560, 3 or more person, 127,820, and that is the same for government and for conventional. So good information there. Now, as far as the qualifications and everything for this particular program from a credit standpoint. All right, so let's look. I mean, I know them, but I want you guys to be able to see. If I can find them on the site for you to to look at and navigate to. Yeah, here we go. This is what I was wanting to do. Okay, so how do people know if they even qualify for it? So for conventional USDA and VA loans, they have to have a minimum credit score requirement of a 640 or higher, okay, to qualify. And FHA loans has to be 650 or higher, okay? Now, it's not just the credit score. If the credit score meets the criteria, great. We also have to get good findings too. And when I say good findings, it means when we put everything in the system, we apply the down payment assistance towards their transaction in the applicable areas in our application. We have to run it and get, and it's what they call an approve eligible. That's what we know. Okay, They are approved based on the income, and they are approved based on the program. So approved eligible, you have to have that in order to qualify, to get everything submitted towards them. Okay. Sometimes we get is what they call a refer eligible, which means they could possibly qualify for a mortgage loan. It's just they have to go in and get a little more in depth. Like the underwriter wants to review it before they would issue an approval. So we basically send it in for a manual underwrite. Most manual underwrite programs that are available right now are like for FHA and VA. I think that's pretty much it for right now. Conventional is close. They are actually, exploring that. I think there's actually an option for that, but it's very rare that we even see those. But refer eligible is required for a manual underwrite, but that unfortunately manual underwrites just exclude you from qualifying for the down payment assistance. Okay, so I just wanted to kind of go over that as a quick FYI. All right. So that's pretty much it as far as like OFA. So, it's lots of good information. I know I'm throwing a lot at you today, but I just kind of wanted to try to cover as much as I possibly could. And just so you guys had a general understanding what's available, for your buyers and how I can help them, see what we can do about getting them approved for that. Okay. So that's in a nutshell what OFA is. So the last one I'm going to show you is our community's first program. So I'm going to stop that one because this is the one that I want. Okay, so I'm going to reshare my screen under a different section. Okay, let me see, where was it? I think this is the one. Yes, okay. Okay, guys. All right. So our other option that we are an approved down payment assistance company for is called Communities First. Now, this particular program is very similar to OFA's. The biggest difference with them is, the amount of time that the borrowers, I should have probably touched on this too real quick with OFA. So I'm going to circle back just real quick. All right. So for a standard buyer, with OFA. If they do get the grant, they have to stay in that home for at least a minimum of 7 years. And then that OFA down payment assistance fund is completely forgivable. Okay, I just wanted to make sure and just give you that information as well. If they are considered a Ohio Heroes program and they qualified for that particular product of the OFA, it's only 5 years. So it's either 7 or 5, depending upon what you qualify for. Okay. Now, what's unique about this other program here for Communities First is that it does not require it's not a second mortgage or a silent second like what OPA is. It's another true grant that is not required, to be paid back, which is kind of nice. As you can see here, it says the Communities First program, Communities First down payment assistance is, made simple. The Port of Greater Cincinnati developed an authority, a DBA they call it the Port, to provide and offer communities first down payment assistance program, providing first mortgage financing and down payment closing cost assistance to grants and eligible home buyers. The Port created Communities First Ohio as a commitment to increasing home ownership opportunities for residents in Ohio. So just kind of some of the benefits about this particular program. It's like I mentioned, it's not a second mortgage because Communities First is a true grant, not a loan. There is no second mortgage on the home. It's true funds that are, it's a one and done, which is great. Additionally, because Communities First is a grant, there are no restrictions on reselling your home or refinancing your mortgage. So say, for instance, if you, because they do have an interest rate requirements very similar to what OFA is, they select the rate, we don't. But in the event rates did drop and you wanted to refinance your mortgage in 6 months, a year, whatever it is, you could and not have any kind of penalty. Okay. And so this is another thing that's the borrower is based on a certain incomes or income limits are based on the borrower, not the household. With the grant, the borrower receives instant equity in their home. Since this is not going on as a second mortgage, it's a little bit less paperwork for us to do. No documents to record a second mortgage or sell to a service or anything like that. Increased flexibility, 3, 4, or 5% down payment options allow home buyer more flexibility to choose only what they need to keep, interest rates low. So they give you like a 3 or 4 or 5%, down payment assistant option. Okay. Just so you guys have that information. Now, one thing about them is that they have their funds. OFA seems like they have endless funds, I guess, but Communities First is a little bit different. This is more bank focused, not like a federal thing focused like what OFA is. With Communities First, sometimes we have to check during the year, depending upon how much funds they have available to help with people. They may only offer like a 3% down payment assistance, maybe for a certain amount of time, as opposed to the 3 or 5. So, but I always go back on there and check just in case if we ever needed to go this route. I'll make sure we'll go to their site and with their login and put in our profile, put in our information, and they'll tell us, hey, this particular amount of down payment assistance is available for the borrower based on the funds that we have available. So, okay. All right. So let me go. All right. So here's the conventional option. So I won't go into too much detail for these just to kind of, just for time purposes, but I just wanted to kind of show you like some of the criteria. Okay. All right. So for conventional, and we run it Freddie Mac. So the minimum credit score requirement is a 620. So if they get an approved eligible, and they can potentially get to 3, 4, or 5% up to those down payment assistance funds. And then I wanted to show you, here we go, property types. Okay, allowable properties. 1 to 2 unit primary residence. It has to be owner occupied, for sure. They don't do anything as far as investment properties yet. 2-unit properties, borrower must contribute a minimum of 3% of their own funds. Condominiums, townhomes, PUDs. So not allowed rental homes, so like investment properties, cooperative housing, homes used as investment properties, recreational second homes, motor homes, campers, manufactured housing, those kinds of things. So they're a little bit more limited with the property type, but it still could be an option if they meet the rest of the criteria. Okay, so I just kind of wanted to show you a little bit about that real quick, and then let me make sure, because yeah, that's right. That's the 80% area to moderate income, so they follow basically Fannie and Freddie's guides for those as well. And then we look at the government option. I'm just going to scroll down here real quick. We'll look at their credit score requirement. Yep, it's still the 620 for the 3, 4, or 5% option. And I think they had the same as far as property types. Okay, so yeah, 1 to 2 unit primary residence, owner occupied duplexes, condominiums, townhomes, PUDs. So this is the same requirements for which property types are allowed. Okay. All right. And in the event that they do have, because this one's a little bit different as opposed to what OFA is, they may honor, and like I say, make that it's underwriter discretion, like a manual underwrite. So say, for instance, we get what we call a refer eligible for a VA loan, but the borrower is still wanting to try to get some down payment assistance funds. As long as they have a minimum of 620 and they still have 2 months reserves, and that's on top of any funds they're planning on using for this transaction, they may, be able to get a manual underwrite and accept and get an approval that way. Okay. But like I mentioned, I'll go over all these things with the borrowers and check every avenue to make sure to see what they qualify for, to make sure that if there is some DPA funds available, what they qualify for, and to help them with that. Okay. So that's basically all of the DPA stuff that I wanted to kind of touch on today. I know I'm trying to think of how many already that we've had this year. I know me personally, between January and February and now, I think I did at least 4 of the CCM Smart Starts. I think I did like 3 OFAs already. Those, and I think I did 1 Communities First, I think too. So guys, these options are available, for clients. We are one of the largest, mortgage companies that has access to all these different types of down payment assistance programs. Most of them just have 1 or 2. If they're lucky to be approved for them, we have a whole bunch of them, especially our own in-house version of it. So lots of good information. If you guys ever have any questions with borrowers that need pre-approved, or just maybe don't understand what their options are, or they know they're going to need a little bit of money to maybe help just get them over the hump to be able to buy, just let me know. Give them my card, give them my phone number. I'd be more than happy to kind of talk to them just to make sure that they've been told all of the different options that they could possibly qualify for. A lot of the clients that I've been receiving lately have just no one even told them that any of these kind of things were out there. They thought they had to save up 20% or 5% of their own. I'm like, look, if you meet this criteria, we can get you some money to help. Then we may be able to even get some seller concessions or get a gift from mom and dad, something like that to help them. And they don't think they have that whole burden is just weighing on them in order to buy a house, you know? So, but that's my job. That's our job. That's Cross Country's job, is to make sure that we get everybody in the best situation possible, let them know what options are available for them, and to put them in the best situation financially. That's our model. That's what we do. Okay. Now, anybody on Zoom, questions? Anybody, if you do have any questions, please unmute. We have a few in the classroom here that can, listen to you and hear. I think I got the volume up. So any questions, or does anybody want to go over any scenarios or anything like that? Just want to make sure and leave a little bit of time for questions too, if you guys needed anything. Okay. All right. Everybody's good? Okay. You guys have any questions in the classroom? Everybody, you guys good? Yes. Uh-huh. Yeah.
How much assistance does that offer?
Yeah. Well, there's a couple of types. There's either a 3, 4, or a 5% option. So, and that's all based on purchase price. So whatever the purchase price is, 3, 4, or 5% of whatever that would be, that's the amount that they could get. Yeah. So yeah, great program. So, okay, guys. Well, if that's it, enjoy the rest of your week. We're already at the end of March, so time's going way too fast. It seems like I can't believe we're already 3 months in, and it seems like we just got in 2025. So happy selling. Get out there and do your best. And like I said, you guys need anything at all, feel free to give me a call anytime. I'm here to help you guys and your clients. All right. All right. Enjoy your day, guys.